the 50-30-20 rule of budgeting. If you cannot track back where have you spent and on what, then this rule is for you. Initially popularized by Senator Elizabeth Warren in her famous book named All Your Worth Ultimate Lifetime Money Plan, the basic idea behind this rule is to work on your after tax income and divide it in such a way that all your needs, wants, and savings are justified. So let's take a look over this rule and how can you implement it in your daily life. First, let's decode the rule. The rule is very simple in practice. It asks you to break your in-hand income into three parts. First, 50% of the income goes towards the needs. Second, 30% for wants. And third, 20% to the savings and investing. In this way, you will set buckets for everything and operate within the allocated amount for each bucket. This will create a sense of discipline at the same time, ensuring that you neither compromise on the quality of your living nor planning for your long-term goals. Now, as the rule is clear, let's understand how to categorize your spending buckets into needs, wants, and savings. Breaking the 50-30-20 proportion. Number 1. Limit your needs to 50% of your after-tax income. Now take out a pen and paper and write down your budget and figure out how much money you spend on your needs each month on things like groceries, housing, utilities, health insurance, car payments, and car insurance. According to Elizabeth Warren and Amelia Warren and their 50-30-20 rule, the amount that you spend on these things should total no more than 50% of your after-tax pay. Of course, now you must differentiate between which expenses are needs and which are your wants. Basically, any payment that you can let go with only minor inconveniences. This can include your cable bill or back to school clothing. Any payment that would severely impact your quality of life, such as electricity and prescription medicines, will be called as your need. If you cannot let go a payment, such as a minimum payment on a credit card, it can be considered a need because your credit score will be negatively impacted if you don't pay the minimum. By the same process, if the minimum payment required is $25 and you regularly pay $100 a month to keep a manageable balance, then this additional $75 will not be categorized as a need. Number 2. Limit your wants to 30%. Basically, wants are all the things you spend money on that are not absolutely essential in your life. This includes dinner and movies out, that new handbag, tickets to sporting events, vacations, the latest electronic gadget, and ultra high speed internet. Anything in the wants bucket is optional if you boil it down. You can work out at home instead of going to the gym, cook instead of eating out, or watch sports on TV instead of getting tickets to the game. This category also includes those upgrade decisions you make, such as choosing a costlier steak instead of a less expensive hamburger, buying a Mercedes Benz instead of a more economical Honda, or choosing between watching television using an antenna for free or spending money to watch cable TV. Basically, wants are all those extra you spend money on that make life more enjoyable and entertaining. Number 3. Spend 20% on savings and debt repayments. As mentioned in the first point, if you remember, those extra $75 you pay on that credit card each month, that's neither a want nor a need. It's the 20 in the 50-30-20 rule. So it will be categorized in a class of its own. You should spend at least 20% of your after-tax income repaying your debts and saving money in your emergency fund or on your retirement accounts. If you carry a credit card balance, the minimum payment is a need and it counts towards the 50%. Anything extra is an additional debt repayment which goes towards this 20% category. If you carry a mortgage or a car loan, the minimum payment is a need and any extra payment will be counted towards saving and debt repayment. Let's take an example of the 50-30-20 plan. Let's say Steve's total take-home pay each month is $3,500. Now using the 50-30-20 rule, Steve cannot spend more than $1,750 per month on his needs. Steve probably can't afford a $1,500 a month rent or mortgage payment. At least not unless his utilities, car payment, minimum credit card payments, insurance premiums, and other necessities of life don't exceed $250 a month. If Steve owns a home or is locked into a lease, then he is pretty much stuck with that $1,500 payment. Now Steve should consider relocating when his lease expires to make his budget more manageable, or take a look at his other needs to see if there's a way that he can reduce any one of them. Maybe shop for more affordable insurance or transfer the balance on that credit card to one with a lower interest so his minimum payment drops a bit. Steve can spend $1,050 a month on his wants based on $3,500 that he is bringing home each month. Steve might consider leaving a few things and shifting some of his money to the needs column if he is coming up short there. Not necessarily indefinitely, but until he can get his needs down to a more manageable level. Remember, he will still need 20% left over so he can save and pay down his debts according to the 50, 30, and 20 plan. Now, as Steve is left with $700, that last 20%, he knows exactly what to do with it: pay down on his debt, save for an emergency, and plan for his future. Conclusion: once you successfully manage and stabilize your lifestyle, you can try to allocate more funds towards the savings part. Now the rule can be read as 50 goes to needs, 20 goes to wants, and 30% goes to the savings, and so on. You can always make corrections on this rule as per your suitability, but you must ensure that at least 20% of your post-tax income goes towards the savings part. Following this 50-30-20 rule will empower you to deploy due diligence in your money matters and ensure that all your money is not just spent. Once you know the wealth inflows and outflows, you will be able to exert greater control on how you want to spend your money and consequently become more mindful of your spending habits. Make sure you balance all the buckets according to this rule to get maximum benefit of the money that you earn. If you found this video informative, then make sure to press the like button and subscribe to our channel so that you can receive notifications for our upcoming videos on money saving and investing. Thank you.